recording is on. The next 5-10 minutes, what I want to cover is what to expect going into the next couple of days, and what to expect from market. Um, and I mean, I do this once in a while because when I see some key events going on, or something technically that makes me that seems interesting. So what I want to point out is, if you notice all the way from here, we have had interesting run. This has been like 1, 2, 3, 4, 5, 6, 7 days in a row. We have had green days, and the most interesting part is look at the low of each day. These lows are technically higher than the previous day's low, if you watch that, right? So what it tells you is there is a lot of bullish momentum. There are a lot of people who are buying it. Whenever there is a little pullback, people jump in and they buy, right? That's an indication how I look into it. But if you look at today's trading session, so what I'm showing you is ES. It's an E-mini futures. It trades kind of like 23 hours in a day and 5 days a week, and so that is why you see it a little different than SPY. But this is our trading this is our trading session for the day. And today what we did is we actually tested 2 days, 3 days low. So we basically broke a pattern. The pattern I want to refer here is we were one time framing. One time framing is a technology or a word used to tell that the markets are ramp going up and up and up, and they are making each every day the low is higher than the previous day's low. So that's one time framing. Today what we did is we broke that pattern, and that's the noticeable thing that I thought it might be a good idea to come and take a look and see what's going on. So today's low is key in my opinion. I always like to have reference points in order for me to figure out above this level we are bullish, below this level we should start becoming cautious, start looking for downside moves, start looking for support on the downside side. So the low of today's session is a reference point for me. I want to carry this forward in my trading sessions to make sure that as long as we continue to trade above today's low, which is a little bit around 3,880 on ES, um, these lows will be bought anytime for the next few session. If overnight session you see market coming and testing this low, buy it with, and if you buy at these level, your stop loss is not more than point two. You can use a smaller stop loss and buy these lows in order to see a bounce uh, till till they get broken out. So in the market, you have this theory, right? Keep doing that is working until unless it stops working. So keep an eye on this low. Anytime you're trading futures, overnight sessions, you see market testing this low, look for a buy entry at these levels at today's lows. Now, going back to see what is possible or what could have happened in the next days. So one of the things that I use SMAs as a good indicator for me to give me an idea about where there is support, where there is resistance, what's going on, what's not going on. So what I think is we probably are going to chop around between these two levels for the next few days until we break in either of the direction, right? So, so what I'm expecting is a more consolidation, and I would not be surprised if we go a little bit more uh, deeper in the sense like we come and test these breakouts. These were the previous highs, so it is perfectly fine, and I think it will still be a bullish area to. If we lose 3880, the area of support is going to be 3860, because these were the previous highs that we broke out, and we have had this run. And if you understand the trend, and if you have read books around trend definitions, what you would notice is whenever a trend is whenever you break out of a resistance, the market will come and retest the breakout in order to find if the breakout is a real or is it a fake out, and if there are buyers coming in, and there are people who are left around, so they're looking for an entry. So that's your area, 3860 on ES. And after I'm done with it, I can give you levels on SPY if that makes sense. But But those are the two levels that I will be watching going forward to add new positions, right? And as you have heard me on speaking on the voice every time, like this has been the narrative for the whole day, whole 5 days. Uh, First couple of hours we see a sell-off and then a gradual ramp up into the close. Today was no different than that. The only thing different is we did not close at the highs of the session, or we did not get even to the close of the high of the session. So what happens is now I can draw a downtrend line here. I'm using a drawing tool which is not very perfect, but if I zoom out, what I can do is I can use a downtrend line here and use that as a potential resistance going forward. So any move up from here, you will probably see getting rejected at this downtrend line. And and I don't know how long this will happen, and it may break out overnight itself, but I think we're going to see some resistance in and around these areas. So, so I personally do not have a lot of open positions going into the rest of the week. I'll share out my trading diary that I've been doing starting this week. I've been posting the trades that I've been taking and sharing that out. So I'll share that out. So I only have SPY calls that expire this Friday. That's a spread call, 89, 389, 392. But other than that, I do not have any positions that are expiring this week. The other positions that I have are either next week or in the March or you know future in the time. So yes, so that's all about ES. That's all about ES. But since we are here, let's also take a look at NQs. NQs is nothing but it's a tech sector, the technology stock. And if you look at NQs, let's go to the dailies first to take a look at the idea about what happened with NQs today. So uh, see here's the breakout on NQs, and what we did today is we kind of tested this breakout point and we held it, right? Now obviously the break was not perfect. We actually went a little bit deeper into deeper than the actual breakout point, and we got tested. So so far things are good, right? But what it's telling me is that the NQs also have the same pattern, a little bit different. NQs, they actually made a low here, but they also have been straight up for several days. So I think, we might see, I wouldn't be surprised if we see some kind of consolidation here going into next couple of days, form another shelf, a pattern, things like these. Like when breakout happens, you may see like these here. These are good, these are good and good to see because what it's telling you is that there are buyers coming in and the sellers are not selling it and pushing us down. So once you have a run like this, I think it's a good idea. It's a good thing for the market to see a couple of days spending in a range to give you a confidence that these levels are holding, right? So nothing much to talk about. NQs, they look fine. We again keep these levels. These are the highs, right? If on a closing basis, if we are closing below these levels, then the SMAs, the 20 and the 50 will come in play. On an intraday level, use the low of today as a reference point. Use that as a buy point till it starts till it's broken out. I won't go into smaller time frame on NQs, but you will see the same thing. Like if you see what happened is we actually bounced from a previous reference point which we had left a couple of days back. We tested that area and that's where we bounced up from. So this is exactly what I mean. If you've heard me in past, you have heard me saying, guys, look out for signposts that market leaves when it is traversing a path. It will leave those paths, and when it is when it is revisiting those area, you're gonna find those paths acting as support. So these are good indicators, right? I mean, um, obviously this was the first one. If it did not held, then this is the second one to look at, and underneath it, this is the third one to look at for references, right? So this is how I actually do my trading to say, okay, we should have held it. We held it. Now we are going up. Now we are finding resistance in this zone here. So we won't break this level in one shot. We might come and test it a couple of times, and then we break down. And if we are breaking down, these are the levels I'm looking for some intermediary supports, right? Please keep in mind, I'm not saying that the stock market is bearish or we are going to go down. What I'm saying is uh, we have had the run, this run 7, 8 days run looks a little tired. Looks like there is some consolidation coming in. And if you see sell-offs, keep this. If you're having short-term positions, be proactive. Manage them proactively. Avoid short-term positions if you have. If you understand, if you've been trading and you understand trading, market will is designed to kill short-term traders. So if you're not perfect, if you don't know exactly when to get in and when to get out, you will be overrun. So that's about NQs, and the last one is about the Russell 2000. This has been a stellar run, and looks like it's definitely bumping against some resistance. So that's one of the reasons. Uh, there's nothing here for me to talk. The picture itself tells you, right? This is a rising channel. The stock has been in this channel. This is where it tested it and had a like non-stop run. And right now it is finding some resistance around it. So once so what can it do? It can again come down and test this level here, or it can just be go sideways. Um, after this huge run, I would more bet towards down move than a sideways move. And that is why I said, guys, I replied back to JB's IWM puts call saying that if you have this, hold on to it. Don't be in a rush to sell it. You may see some decent gain if we come and retest these lines, right? So you might see a small cap under some pressure for the next few sessions. So yeah, so that is all from my side. I hope this small 10-15 minute talk gives you an idea about the overall broad level market, what to expect coming in the next couple of sessions, I mean next few sessions, and especially on IWM. I have 5 more minutes. The floor is open for questions. You have any questions, please let me know. I'll try to answer it.
So if I have few calls expiring this Friday, is it better to close them early when the market opens tomorrow morning?
I think that would be a good idea to do because options have time decay. So when market goes sideways and when market are churning, your options are not making any money. They will be losing money. So um, avoiding short-term bets at this point seems to be the right thing for me to do. Um, I I am looking for more churn because we have had this stellar run. Come on, guys, like 2 weeks, the market was running right every day. So now, if it moves sideways, we should be open for it. So yes, that's definitely my suggestion. Avoid picking something that expires this week, and next week we have, I think, 4 days trading. So that's going to be a short week too. So be mindful of that.
Thank you.
That's the whole idea. The whole reason of calling in this last minute, uh, guys, is that I see this. It's always good to be safer than to be sorry, right? So if we are suspicious that there's a potential market, going sideways thing, we can place ourselves for such a move. Or if you are not planning to sell, convert it into a spread. Sell something of a higher strike and convert that into a spread, so that if there is a sideway movement, if you are bullish on something for the next couple of days, and if there is a sideway movement, you are not losing a lot. The calls that you have sold, they also lose money, and your loss is less. That would be another thing to do. Yeah, any other question, guys? Please open up. I mean, okay, so I think I'm done. I'm gonna stop recording. So